Doom. All right, I'm gonna wear my doom and gloom hat. Market review, Germany 30. Wanda is giving me DE30 euro ticker, but I don't know how your broker treats that. It's a CFD, currency euro. Guys, this is the monthly 12-month moving average. We're going to be doing my chart trading framework right before we apply some stage analysis, Stan Weinstein, on the weekly. Here I'm starting to highlight these previous highs, and I count down how many months it's been since we've overcame it. And now, since this little high we had back here in January's candle, 1, 2, 3, 4, 5, 6, 7, 8. 8 months. Monthly defined resistance. Look at all these wicks right above. Zoom, zoom, zoom. Japanese candles, wicks, price getting closed below. Try it again, close below. Buyers try to make a run for it. And then they had to close within that monthly defined resistance. And after that, when you see a few of these, sometimes it's time to go test the bottom. Monthly defined. Monthly defined support in progress. So I don't know how this is going to end, but we've had some price action. That's why it's very important not to jump the gun. Wait for those monthly candles to close below defined support. And right now there was some price action below. The buyers came in, started to bring it back up. This is going to be we'll see how much time there's left in the month, see where that closes, if it closes above, below. And then we'll have our monthly defined breakdown if we have a close below it. This is the greedy target. Greedy target is a further away target. And if we want to have a nice, less greedy target, take that, add it to the breakdown line, and you have these targets here. Then you do my targets consideration. This one here, you see, there's no resistance support along the way, so that's easier to get. And this one, what I like, it hits. You get the trigger out, profit limit, before you hit this resistance here. Previous resistance turns support, what I call a wall. So all this, there's support here. You're going to get triggered out right before. So this could be a very nice, very clean play, but we have to wait for that close below 12,075. And this one here, yeah. Hitting it could run into some when I have some congestion area here, pull back here, this resistance right here now becomes support. So we could have the 12-month moving average going down. This is me using my imagination, going down here, hitting, coming back, and here, back, and who knows what happens after. But why am I doing the higher trend? Well, multi-time frame analysis, top to bottom, make sure we have the higher trend in our favor. So whatever direction, now we're already seeing that the 12-month moving average is starting to decline. Price action is below. The longer it is below, the more it's dragging it down, the harder it is to make it go flat and go up again. So these are all the signs of embryonic stage 4 on the monthly. But what we want to do is we want to do it the Stan way. On the weekly, zoom out, look at this nice base, beautiful stage 2, starting again, choppy waters below 30 moving average, sign to get out, last burst, and then you get sideways move. Sideways move, you start getting close to 30 moving average, you start getting close to that Ichimoku cloud defined support, you're going in it, it's getting thinner and thinner. Then after that, you could go either way, go back up, continuation stage 2 or stage 3 to a stage 4. And right now, 30 moving average has been declining for a while, but having some price action above, sometimes below. That's why this The Mansfield indicator, comparing to the SPX, its performance. If it's red, it's because the price action is below 30-week moving average. It's because the 30-week average is declining and you're below the zero line. If any of those three conditions are not there, then you see here the price action was closed above. It's gray, neutral. You don't want to buy. You want to short a stock if it's above a 30-week moving average, and you don't want to buy a stock if it's below, and you don't want to short if it's above. But right now, it's below. So this thing is really in the stage 4 right now. There's no Ichimoku cloud defined support. We're treading right here, try to break down below that monthly defined support right here. But you had the Ichimoku cloud, brought it back up. That's why it's important to make sure you're out of the cloud, to make sure that the monthly defined support is confirmed below, or else you get these false breakdowns right here. If I remove the cloud and I don't look at multi-time frame analysis, right here I might get trapped. I get whipsawed in, and then I'd have to go back in, suffer. And after that, I can't take anymore. I'm going to cut my losses, and then goes back down. What else do we have? Right here, some weekly defined, the closest weekly defined support. Convincing close below it. Now it's pulling back. And if we get close back to here, then another opportunity to short. Timber. But again, the best is just to wait for that monthly close, get that ultimate confirmation, the higher trend, and then you're all set to go, guys. You've put all the eggs on your side. And guys, this is Germany. I think I did I did the euro a week back or two. And all these indexes, other than the US, they're not doing too good, guys. Most of them are stage 3. They're stage 4 like this. And once these monthly confirmations, they start piling in, then the rollover is going to be complete. And then we're going to have a little downtrend. That's it for Germany 30, guys. Timber. All right. Ciao.